Well, hi there, and welcome back to another episode of Let's Talk Real Estate Investing. I'm your host, Sharon Vornholt, and I'm so happy you're tuning in today. My guest today is Matt Larson, and look behind him on this beautiful lake view that he's got. I'm so jealous. Matt is a full-time real estate investor with 17 years experience, and he invests in multiple markets. Matt has done over 4,000 real estate transactions, and he currently uses VAs to run this large-scale real estate investing company. So I can't wait to dive into that part of the show. Welcome to the show, Matt.
Glad to be here. Thanks for having me.
Well, let's start out. You've got such a varied background. Let's start out by telling everybody a little bit about your background and how you got into real estate investing, first of all.
Okay. So, I started in 2005. How I got into it was kind of a crazy story. I'll give the faster version. But I grew up in a small town in Illinois, and neither of my parents went to college. I tried to go to college. I went to college for one semester, and after that semester, they told me, I couldn't come back. So, I ended up working in a machine shop in a small town, and it was the highest paying job that there was, and I stayed there for almost 10 years total. And but the real story here is I didn't really understand how to make money. My dad never really made much money. My parents, nobody in my family ever had. So I was dating a girl at the time, and she was a much higher status than me as far as she was a doctor. I'm just this guy that comes home every day, and I'm covered in grease and dirt from my machine shop job. And one day she broke up with me, and when I asked her why, she said she wanted to date somebody with status, somebody that makes money. And at that point, I didn't really know how to make money. I'd never really read any I didn't really even know self-help books existed. And I was stressed out one night. I used to keep I lived in a very small apartment, and the bedroom and the living room were basically the same room. I kept the TV on all night, and I woke up in the middle of the night, and there was an infomercial on TV. And the infomercial was saying, man, you could flip houses. You don't need money. You don't need credit and all this stuff. And so I bought the books and figured this was my chance to make money and, gain status. So that was in 2005. I did my very first deal within 30 days, did another deal 30 days later, another one 30 days later, another one 30 days later. And after about 3 years, so you fast forward in November 7th, 2005, I did my very first deal, or November 10th, 2005, I did my first deal. Fast forward 3 years, and we're in the worst economy since the Great Depression. And at that point, November 7th, 2008, I left my job because for the first 3 years, I worked full time while I was doing real estate on the side. In November 7th, 2008, I left my job, which was, everybody said, you're crazy. Like, nobody's quitting their job right now. Everybody's clinging to job security. I mean, you're talking about hundreds and hundreds of thousands of people being laid off on a regular basis. Yeah. I quit my job. I had about 30 properties in my rental portfolio at that point, and I was buying rental properties. I was, from 05 to 08, I was buying rental properties, doing some fix and flips, and doing some wholesaling. And in 08, when I went full time, I had all my time now. Plus, I had the knowledge of doing real estate and finding good deals when good deals were hard to get. 05 to 07 was very difficult. Yes. The market was crazy. So by 2008, I had about 30 properties in my portfolio. But when I quit my job, in addition to the market dropping, it was the opportunity of a lifetime. And by 2013, I had 450 houses in my portfolio, and was doing millions net a year in fix and flip and wholesale profits. And the rest is history there. I really took that opportunity to make a lot of money in a very short amount of time and build my portfolio up. And then in the last few years, we've hit a very high. I've sold off about 300 of my properties over the last couple of years. And so buy low, sell high. And that's kind of where we're at today. I'm very active, very always buying fix and flips, always buying wholesales. And doing, I still have my rental portfolio.
That's so interesting. I have to ask you, was that Carlton Sheets program that you bought?
No, it was actually Dean Graziosi.
Okay.
Dean. Yeah. What's crazy about that story is at some point, so a lot of people don't know this about me, but I did so well with Dean's program. He ended up running a contest to find his top student. And this was like right around that 2008, 2009 time period. And he sent everybody a video camera. This is before, cell phones didn't have cameras on them at this point. So he sent everybody a video camera. He just gave us some quick instructions, film some, a lot of your deals. And I wasn't going to do it. And a friend of mine was like, Matt, you got to do it. And I'm like, I've never won any contest in my life. So long story short, we run around to a whole bunch of properties. We filmed a video about how I bought them and what I paid and what they're worth, and sent it in. And I was notified I was in the top 5 of all the students, and then all of a sudden I win. And
Wow.
the amazing thing here is I wasn't back then. I wasn't used to vacations. Like now, I live in a vacation destination basically at my lake. But back then, I just worked so much. I was so used to working hard because I was working full time plus doing real estate, and so when I won the contest, which was a all inclusive vacation to a tropical place, they kept calling me every month and saying, "Hey, are you going to book your trip? Are you going to book your trip?" And I just finally, after 6 months of them calling me, and I just never booking it, I said, "Hey, can I trade my trip in with just for dinner with Dean?" And so I met Dean one night at a restaurant in Scottsdale, Arizona, and we hit it off really well. And he was asking me a lot about what I was doing. And long story short, I ended up being the background guy that created all of Dean's real estate education for about 8 years. So if anybody listening had bought anything from Dean between the years of basically 2010 through 2018, that was my real estate education, and I was paid a royalty for creating that for Dean. So it was kind of a neat deal that ended up happening from all of that. So I was the guy that bought the stuff off the infomercial, and then eventually I was the guy that they put on the infomercial years later, and then eventually I became the guy that created the education.
So I think that people need to take away from this that if you put in the work, and sometimes you just end up in the right situation, but you have to put in the work first. You have to be the real deal. You have to be the person they want to have to partner with. So tell me, this is kind of something I should ask you at the end, but I'm going to ask you now. You've nearly networked with some heavy hitters. So how has sitting in the room with these influencers changed your mindset around business?
Well, first of all, the influencer, the social media has made everybody an influencer almost.
Right.
There's a lot of legit people out there that are truly behind the scenes, that are truly really doing things that they're stating they're doing, but there's a lot of people that are not. And I was on the speaking circuit for a while. I was being asked to speak everywhere. And I've even spoken on stage for Tony Robbins and some really big names. But what I learned was there's a lot of people, you'd see the people that are on TV shows doing fix and flip shows. I've met a lot of those people, and they're not, none of that, most of that stuff, 95% of it's not real. Those houses are not owned by them. They're not flipped by them. A lot of them don't really sell. They say they sell on the show. So there's a lot of stuff in the influencer world that's fake. But I will say that there are some legit people, and I've learned a lot from people that are in the industry that are doing big things. And if you find somebody that's doing big things, there's a pretty good chance that somebody else helped them along the way. They learned some things from those people that helped them build their own business. I'd like to say I've helped a lot of entrepreneurs in my career too, but I also learned a lot from other influencers as well over the years. So it's exciting to be in rooms where people are doing big things. It's motivating. It's fun.
It is. So you're in mostly a single family, or you started out mostly in single family? Or are you still in single family?
Yeah, I do mostly single family.
Okay.
But I've done a lot of, I've had years. I mean, in 2013, the market was still down, but it was starting to recover. And that year I bought $20 million in just commercial deals too,
Mhm.
in addition to 20 million in residential that year. So, so I do commercial. In fact, I just flipped a multi-million dollar commercial deal a few weeks ago. So I do some commercial, but the majority of the deals I do are single family. And here's why. I want everybody to understand why. Is people will say, man, somebody that's done as many deals as you should be doing full, you should be doing $20 million deals. And the reason is because big deals typically require a lot of creativity and they require special, unique talents. What I wanted to do, I wanted to live at my lake house. I wanted to create a lifestyle that I could teach other people how to run my business without me having to pull all the levers and control every move. Wholesaling single family homes and doing easy fix and flips is a very simple business after you put in the years of learning how to do the business. So now my wholesaling business, for example, is completely run without me. It's run by a virtual team. So I do 2 meetings a week in that business. And typically they're set for 30 minutes, one on Monday, one on Thursday. We're usually done in under 30 minutes. And that business, not only other people are sending out the marketing, taking the leads, sorting the leads, determining the max offer price, making the offers, negotiating the deals, getting under contract, finding the buyers, reselling. All of that stuff happens without me. I haven't walked a house that I owned in, it's got to be at least 7-8 years. I run my business virtually, but my wholesaling business runs without my effort. So how can you argue with these small house deals when it doesn't take a lot of your time, or almost none? Like that business, I might have an hour a week into that business total, and we turn a lot of deals. And so it's totally worth it to me. When I do a commercial deal, a big commercial deal like the one that I just sold 3 weeks ago, that takes my effort and my time to do those deals. So that's kind of why I do what I do.
I think single family homes are so attractive to most people because everybody understands single family homes. They understand how that works, and everyone needs a place to live. But when you get into commercial buildings, you're right, it takes special skill sets, often takes a lot more capital.
Mm-hmm.
It's not something that you just fall into. Like most people can figure out single family homes if they follow the right people and take the right
Mm-hmm.
steps. But I
Mm-hmm.
think it's so interesting. And I use VAs and you use VAs in your business. But how did you train your VAs to be the perfect people for your business, to have the skills? Did they come with any of the skills, or did you start fresh with those people?
Yeah, so we hired all of the VAs that work. I can't think of any VAs that work in my wholesaling business that were real estate people
Okay.
before they entered my world. What we did was we hired for core values. We looked for the right, people that had, good. Well, one, we want good English speaking people. We want people that show up on time and work hard and are deadline motivated and, act with a sense of urgency. And we try to screen for those people. And then you take that base core values and you teach them the skills that are required in investing in single family homes. And so if you find the right talent and you hire A players, you can teach them anything. All of these things that we do are skills, and skills can be taught. So we just basically, what I did was we started one at a time. I've got over 100 VAs now between all my companies that work for me full time, but we started one at a time. I didn't hire 15 people at a time. We started one at a time over the years, and we kept adding. and we took my core team. I knew the real estate business. I taught a person on my team the real estate business, and then we've as a group we've taught over the years how to do each individual task. Now it's clockwork. Now it's easy. Like I could hire somebody, we could bring somebody into our ecosystem and with no skill and churn out a very high level, high talent VA within 2 to 4 weeks. So it's not hard anymore. But in the beginning, it was our effort putting it into it. The biggest challenge was the negotiation side. When I started creating my acquisitions VAs, people that get on the phone with a seller and negotiate a price that works, that was the biggest challenge. But we overcame that about 3 years ago. And so now we can produce an acquisitions VA very, very quickly within a couple of months. And so that if you can teach somebody to negotiate, all the other jobs are pretty easy. So, especially the repetitive, redundant jobs that a lot of VAs do.
That's a tough one because they have to understand the market. And if you're working in multiple markets, they have to understand comps, neighborhoods. So how do you overcome that? What does your training look like?
So what we actually, we do things a little different. What we do is we hire lead managers. So our operation works a little bit different. Actually, I call my method the miracle method. And a lot of the influencers that I've come in contact with over the years, they learn how I'm doing my miracle method and they switch because you're right. The comp piece is tough. And here's the other thing. An acquisition salesperson, that mindset, that personality style is not they're not a logical, methodical mindset. They're more of the creative people person. So you give a creative people person, somebody that's good at sales, a methodical, technical task like running comps, and a lot of times they don't excel at it. So I removed that piece from our operation. Instead, I gave that to a lead manager, and we taught the lead manager, which is a different personality style than a salesperson. They're the detail-oriented, methodical thinkers. So we taught them how to do comps and how to do the max offer price. So the way our system works is when a lead comes in through our marketing, we might do direct mail, cold calling, texting. There's a lot of different things we do. We bring in that lead. That lead goes to a lead manager. The lead manager determines if it's a good lead or bad lead based on our buy box. Once it's determined that it's a good lead, we send that over to the acquisitions VA. We do a two call system. The acquisitions VA's first call is just build rapport, find the seller's why, find out any pain points they have, and learn all about the house. Once we learn that goes back to the lead manager. The lead manager reviews all the notes in our CRM, runs comps, and determines the max offer price. Then the lead manager gives that back to the acquisitions VA and says, hey, here's your max offer price, go negotiate. And then the salesperson goes back in and does what they're good at, which is negotiate to a price that we've determined. So that's how
that is so smart, because your person that can close a deal is not always your person that can put those numbers and, like you said, do that other part of it. And I don't think most people are thinking about it that way. So that is so smart. And you don't have to be doing 400 or 500 deals a year. You can be doing 20 deals a year and have those people on your team. And if the way I think about it is you could scale up pretty quickly if you understand this part of it. So that is a huge tip for people. You should go back and hit rewind on this piece of advice, because that's great advice.
Yeah. I've taken a lot of influencers that were doing it the other way, the way everybody does it. And I'd show them what I'm doing and they always switch because they're like, that just makes sense. So
every single time. Now, let me ask you this. We talked a little bit before the show, but about paying these people. People in the Philippines I have found them to be very, very motivated, to have a very good work ethic, and they want very much to succeed. It's a kind of a cultural pride, at least with the ones that I've gotten. And when you talk about, you talk about somebody that's in like a team leader position or a management position, as opposed to someone who's maybe a notch or two down, just broad range. What are we talking about as far as hourly pay?
Yeah.
I'm not a favor in hiring the $4 an hour person.
No.
They're never going to work out. I
Yeah.
think you
You can
get
get
what you pay
lucky.
for.
You can get
Maybe,
lucky
yeah.
sometimes and get some people that are low paid. And, but the question is yeah, how many are you going to go through to find? So, yeah. So all my managers, anybody in a team lead position, they're in that $10 to $12 an hour range. And then if you've got a good manager, one manager can manage, several VAs, probably in the range of 10 to 15 a piece. So you have to have very, very strong team lead. And then from there, you can pay in that $5 to $6 an hour range, depending on the job type. So an acquisitions VA, somebody that's really good at negotiating, they're going to make a lot more. They're
A
going to
lot of
get paid
money.
hourly, a 10 an hour plus bonus for every closed deal. But somebody that's running a text messaging platform, they're in that $5 an hour range, because they don't have to be good at English. They have to have good work ethics, good core values, but they don't have to have English. So the minute you're going to pay for really good English. So that's going to cost you money, and that's worth it, because if somebody's on the phone with clients or other people that you work with or potential sellers, you want good English, right? You just get more
Yes.
respect and an easier way to. So English costs you more. But the thing is, I want everybody to understand, just in case they don't listening, is the minimum wage in the Philippines $1 an hour. So, you get somebody, you're paying somebody $10 an hour. That's like making 100 grand a year in the United States. You're getting top level talent, because, and just in case anybody is like, man, $1 an hour, how can you survive? Well, their cost of living is a lot lower there. So that's something to keep in mind, that an American family goes out to dinner, they're going to spend $100. A Filipino family goes out to a nice restaurant, they're going to spend $5, $10. So it's a lot less. So, but I want to also mention something that you said that's important, is a Filipino's work ethic. They're prideful in working hard. Now, this isn't across the board. You always have the duds that are trying to take advantage, but if you're good at screening, you can get rid of them fairly quickly. But I call that the 1950s American. So the Filipinos of today are like the 1950s Americans. They're very hardworking. They want a long-term career. They want to work for somebody for a long. They don't want a job hop. They want to work for the same person. My very first VA I ever hired still works for me. I hired her, I think back then, we're talking, 9 years ago now, she was making $2 an hour. She makes $12 an hour now, which is a lot of money for them. So that's important. You're right. It's like the 1950s Americans, and I hate to say it, because here I'm as American as you'll ever find, and there's just a lot of lazy Americans now, and they're hard to hire. And you're paying a ton.
It's very hard to get them to come up with the work ethic, if not impossible, almost, that you find in these people. I have had such good luck, and like you, still have the very first VA that I hired still works for me. And we are friends. She has immigrated to New Zealand over the past 5 years for a better life for her family. But she sends me pictures of her kids. She tags me on Facebook. So yes, she works for me, but we're kind of like a family. She said to me one day, "I've kind of grown up with you," because I had a baby, and now I have another little one and a 13-year-old or something. That's gosh, I didn't even really stop to think about that it had been that long. But they do. They are not job hoppers. I hadn't really thought about that, but they're looking for long-term employment.
Yeah. It's been great. When I decided to go virtual after 2017, I made it a real mission to turn my whole company virtual. And it took a few years to just make it all happen, because I didn't want to just fire all my Americans. I had 50 American employees in my office at that point, and I didn't want to just let everybody go. So what I did was hey, anybody that quits or gets fired, we're going to replace them with a VA. So it took me a few years to replace my full staff. Now every single person is replaced with a VA from the Philippines. And I cut over $1 million a year out of my overhead by doing that.
Wow.
So it's a big deal. But the better part is I traded him for a better employee.
Mhm.
Americans use this thing called discretion. They want to come up with the ideas. You give them a printed process to follow. They say, I think I know, but I think even though I've only been working here 6 months and I'm half the age of Matt, and he's been doing real estate 18 years, I got a better idea. I'm going to do it this way. And so Americans use discretion, and discretion is the enemy of duplication. And so I like the VAs because they do not use discretion. They're robotic. You give them a process, you give them a video process or written process, and they follow it to a T. Now that can be good or bad. If you have a bad process, they're going to follow a bad process. But if you take your time and build a very good process, you will get a very duplicatable result.
Excellent. So I want to wind up, go backwards just a little bit to, we talked a little bit about the time before 2008. Those of us that were here in 2008 will never forget it. But I remember you talked about how good things were leading up to 2008. And I had another business at that time, and I worked with a lot of agents. And I can remember an agent looking me in the eye and saying, if they're breathing and they have a job, I can get them a mortgage, which is where all the problems came in. So then we came to 2008, and where it was really difficult for any end buyer to get a mortgage. And I think a lot of us changed our business model. That's when I became an accidental wholesaler, because I just did not want that year or two. I did not want to be stuck with these rehabs. First of all, you had the length of the rehab, and then you didn't know if you were going to be able to sell them to an end buyer. So that's when I kind of got into the foray of wholesaling. But I know that you bought, I'll say this, the whole world was on sale at that time. It was the best buying opportunity of a lifetime. So you grew your portfolio, you said, a lot during that time.
Yeah, because, I was still wholesaling during that time. What I did was how I really, just like you kind of said in my bio, I've done over 4,000 deals in my career, but I had my portfolio up to 450 houses by 2013. And what I did was I would wholesale or fix and flip 3 or 4 houses. And for every 3 or 4 of those deals, I would hold one from rental. So I was creating a lot of cash, and I used my cash to buy my rental properties. Now, here's the thing. Rents did not go down in 2008. They went up. In fact, in 2009, my rents went up across the board by 15%. So the math was very simple. I took, a house that would rent for $1,000 a month. If I was buying it for $30,000 and putting $20,000 into it, I'm all in for 50. It's worth $100, even in a down market, but the rents are $1,000. So the cash flow is extremely high, much higher than what it is right now. So I just stacked my portfolio with a lot of cash flowing assets for a really low price. And then of course, as history shows, we just went up for years and years and years and years and years to where we are right now. And I've sold a lot of those houses for, $50,000 to $100,000 more than I paid 15 years ago now.
What was your strategy behind that? That's a bold move to sell those and you didn't do 1031 exchanges. You sold them, you paid the taxes, and you have this pile of cash. So what was your strategy behind that?
Well, because I'm going to repeat process. It's like the market. I proved the model. Market was up when I started. It crashed. I made a big move, bought a bunch of properties, let them go up to the top, and started sell them off at the top again. And yes, I pay a lot in taxes, but I'm showing a very strong tax return. Bankers like to see strong tax returns. So now, let's say I had a bank that I owed $10 million to, and I paid all of those loans off, and now I paid it to zero. Well, what's going to happen now with my financials the way they are? If the market crashes again and I go back to that bank. The difference is between '08 and now, my financials are 10 times stronger, maybe more, probably more than that. So my strategy is just to repeat process and do everything over again, but do it bigger. So I'm patient. I'm not in a hurry. I'm very patient. And if the market doesn't crash this year or next year, it's going to crash eventually, because that's just how things work. I don't have to time it perfectly. I look like a genius, 08, 9, 10, 11, when I bought everything that I did when everybody was running. And I look like a genius the last couple of years when I sold 300 houses at the top of the market. The reality is I'm not a genius. I use my gut instincts for in 08, 9, 10, 11, 12, 13 is just math. It's just, hey, here's what it rents for. Here's what it's worth today. I'm buying it all the way down here. This is safe. The last couple years, I could have sold short and the market could have kept going up. It didn't. And I sold at the right time. But now I'm patient, right? Like I can wait, and if the market crashes next year, great. If the market doesn't crash for 5 years, great. I'm still going to fix and flip. I'm still going to wholesale the whole time. And it doesn't matter to me at this point.
Okay. So how many rentals did you keep out of all of those?
I have about 100 left right now.
So you've got a nice steady pile of cash flow coming in every month. That's interesting.
Yeah.
So I'm a marketing nerd, so I have to talk to you about marketing. So talk to me about your marketing. Which strategies do you use? Which ones do you like the best? And do you do anything like layering multiple strategies or lead stacking to increase your results on direct mail marketing?
Well, yeah. So I do direct mail, but I used to do a lot more direct mail than I do now. We don't do as much as we used to, because our main thing is cold calling. Cold calling is number one. Text message marketing is number two. I do some TV advertising a little bit here and there too. I've done it all. I've done everything you can dream of, but I just stick to my KPIs. I look at what my average cost per lead is. I look at my average cost per closed contract, and I do less of the things that cost me more, and I do more of the things that cost me less. So we typically, we're always running cold callers and texters. We're bringing in the most leads that way. As far as like lead stacking, we found that a non-owner occupied so an absentee owner with high equity, that list will outperform anything. Second list that outperforms is a vacant non-owner occupied. Okay. So our number one list is a high equity non-owner occupied list. Second list is a non-owner occupied vacant. From there, we can go into some specialty lists, like maybe tax delinquent, but we don't have to do that very often, because what happens in the list world, and this if you run your KPIs really well. We track everything. I have 200 grand invested in my CRM that we built from the ground up. We watch all of our numbers closely, but a list ages. So if you buy a list today, people don't understand this. If you buy a list today, every single day that you own that list, it gets less valuable. Why is that? Because buys and sells and transactions happen every day. So we buy a list every single week. So we don't buy more data than we need. We buy what we need for the week. And then next week, we buy what we need for that week. And the next week, so we're always running fresh data. And if you do that, you can run the two lists that will outperform. Because a lot of people will argue, well, I was watching this guru on a webinar and he said probates, or I was watching this and they said, taxes owed. And I've just done all the KPIs and we've tracked it for years. And a probate list does not outperform a high equity non-owner occupied list. And a vacant list will outperform some of these other specialty lists like eviction list and all this stuff. I just know the math. So we just focus on refreshing the data very often, and we focus on the lists that perform. The next thing we do that's very important, and way underlooked is we run aggressive follow-up sequences for all those leads that we have. So we follow up with, we've closed deals from leads that we got 5 years ago, but we close a lot of leads that we've had in our system for 2 to 6 months. And so let me just explain so everybody understands what I mean. If we get a lead in and we make an offer, it's just easy math just for everybody to understand. Let's say the house is worth 100, seller asks for 100 but owes nothing. We need to buy that at 50 grand. We made an offer for 50. They said no, they don't want to go that low. Maybe we got them to 70. We will continue to follow up with that seller forever, every single month until we get that deal or they tell us not to call them anymore. So that 75% of the deals we close come from that follow-up sequence.
And well, let me interrupt you here. So what's your follow-up sequence?
So we do email, we do text messaging, and we do phone calls. Okay. And if we're really close on the, let's say that if we're really far apart on the deal, we'll follow up every month. So like, let's say if the house is worth, it's just easy math. If the house is worth 100 and we wanted it for 50 and the seller's at 90, we're pretty far apart on that deal. We're not going to call them every week. We're going to call them once a month and call them, email and text them and just let them know that, hey, if anything changes with your situation, we love your property. We'd love to have it in our portfolio. If anything changes, we'll keep following up. But if we're close, if we're 10,000 apart in that same, like we wanted it for 50 and they were at 60, we got them down to 60. We'll follow up with that person every week or two. The other thing that I did, I built out. So I'm a big Podio guy. I put 200 grand of my own cash into building out our Podio. So it's completely customized. We built follow-up sequences for every motivation type. So if the person's going through a divorce, that when we hit a button in the background with no effort, we're sending messages at periodic times, talking to the seller about selling their house because, they want to get through this divorce. Or if it's a tired landlord, it's a different series of message. If it's a out of state owner, it might be another different series of message. If it's a somebody that lost their job or an income issue, there's like 10 different reasons.
Scenarios.
So we just customize those. We hit a button and that follows up. And then on top of that, we manually follow up too on the ones that are close.
I think that the national statistic is that at somewhere around 80% of your deals will come from consistent follow-up. And so many people, and I think all people, when they're new, they're guilty of this. Mm-hmm. Somebody says no, you actually think that means no. When I look at it now as being not now.
Yeah.
But that
no
is the first step. Smart. No is the first step.
No is the first step. No is your opportunity. Like I tell my team, all of our acquisitions VAs, they have to do 8 offers a day. That's what's required. They have to make eight offers a day. And you're right on the 80%. Our stat is like 77% of the offers we actually close after on the follow-up. Wow. But they have to make 8 offers a day. A lot of people, if they make 8 offers and they're told no on all 8, they're down, they're discouraged. They're done. We're happy because now we have 8 follow-ups. We now own an asset. That asset is those offers we made and the relationship we built with the seller. So if I stack up, in my Podio system, I got 17,000, around 17,000 offers that we've made that we didn't get accepted over the time I've owned my CRM. I can drop a button. I can drop an RVM to those sellers that we've talked to in the past, and I'll get between 300 and 400 responses every month just from that. So what that means is I could shut my marketing off. I wouldn't do this, but I could shut my marketing off and just work on the 17,000 leads I have, because that's an asset I own for probably a couple years, and close deals every month just from that.
I don't think many people think of it that way. I don't think I've ever heard somebody put it quite that way, that it's an asset that you own, but that's a smart way to think about it. And I would encourage everybody to think about it this way, because I preach this all the time. You have to have consistent follow-up, because that's where your deals are going to come from.
100%.
Well, Matt, this has been just a show that's just packed full of goodness. Do you have any final advice for folks if they're, to help them keep moving forward? And maybe you just got some words of wisdom that you'd like to share.
Yeah, discouragement in this business is part of the process. You're going to have good days and you're going to have bad days. You're going to cash really big checks sometimes, and you might have a little drought you run through. The bottom line, though, is if you stick with it, if you stick with it and you're consistent every single day, you get out of bed, whether you had a good day yesterday or not, whether you got contracts or not, maybe you just had a deal, the biggest deal of your life, not close and fall apart. You're going to have deals fall apart forever. Guys like me still have deals fall apart. That's real estate. Be consistent every day. Don't give up when giving up is what everybody else does. And you'll wake up in 5 years, have 5-year goals, because you'll wake up in 5 years making more money than you dreamed possible. In 08, the last thing I'll say is in 08, I had $20,000 in my bank account. And I thought, and that was a lot of money for me, because I'd been in real estate 3 years, and that was the most money I ever had in my life. I'm 33 years old at that time. By 2013, I had over $1 million in cash saved from all the deals I flipped. And I remember in 08 thinking, if I could just get, $50,000, I'm rich at that point. I just thought I was set. You get to $1 million 5 years and you look back and you're like, how did that happen? I have 450 houses in my portfolio, 7 figures in cash in the bank. And 5 years goes by fast. 5 years, everybody listening, 5 years will happen faster than you think. It's going to stack every day, stacks on top, a little bit of momentum. And next thing you'll wake up and you'll be making more money than you thought possible.
Well, that's great advice. What's the best way for folks to get in touch with you, Matt?
So all my social media profiles are on my website. If you go to realestatemat.com, first page, you'll see all my handles. I used to give out my actual handles. Then I got I had my Instagram. I had a bunch of followers on Instagram and it got hacked. And then now all those podcast episodes from back then, they're sending people to the wrong Instagram account that I don't even have anymore. So I just tell everybody, go to my website, realestatemat.com, and all my handles are right there on the first page. If you message me, there's a pretty good chance it's going to be me. I do have a lot of VAs working for me, and I have one VA that helps me with social media. But if you message me and it's her responding, she'll tell you it's her. So we don't try to fake people out, like somebody pretends to be me. Like if it's me, it'll be me. So.
Great. I'll put those links below so that you all can reach out to Matt. He has some training and some things that he offers, and you can find out about all of those on his website. So thanks again, Matt, for coming out today. It was fun.
Yeah, been fun.
And thanks to all the listeners that come out week after week. And please share the show and leave us a rating and a review over on iTunes. I would so appreciate it. And I will see you same time, same place next week. Bye for now.